Do you want the coverage that life insurance provides, but don't like that your term policy can run out? Or maybe you don't like the rigid and inflexible payments of a whole life policy? Well, by the end of this video, you're going to have a better understanding of another life insurance option that can protect your loved ones financially, grow a cash reserve for you while you're living, and offer you more flexibility than being locked into a whole life payment for the rest of your life. My name is Jake Williams, and I'm a life insurance specialist with Step Up Wealth Management. For more information on setting up a comprehensive financial plan, please make sure to subscribe to my YouTube channel, hit the notification bell, and be notified anytime I post a new video. So what I'm talking about is universal life insurance. It's a life insurance product just like the other ones I've been talking about. So its primary purpose is the death benefit and protection for your loved ones. That is the main purpose of all types of life insurance. But like whole life, universal life insurance also can grow a cash value. So you have the protection for your loved ones, but you also have some cash that is available to you while you're living. Depending on how that gets treated and how you access that cash, there can be tax advantages for doing it as well. The primary difference between whole life and universal life is the flexibility that a universal life offers. So a whole life policy, you're paying the same premium for the rest of your life, unless you stop, in which case it starts just taking that premium from the cash value. Universal life is a little bit different. So you're going to have your death benefit and your death benefit value, but then you get the cash value. You've got a cash account, basically. There's a separate account that tracks out your cash value. And you can vary how much you pay. And as long as you are covering the cost of insurance, which is basically the cost of running that policy, what it costs the company to insure you, their fees and costs, if you're covering that cost of insurance, anything above that cost of insurance up to a limit just goes towards your cash value. Now you have to make sure when you're paying into these cash values that you don't contribute too much too fast. The IRS doesn't like that. If you put too much money in too quickly, that can take away some of the benefits of a cash value life insurance policy, but we will talk about those in a later video. So if the idea of a universal life policy interests you, drop me a comment below and let me know what part of the universal life policy caught your attention. There are a couple of variations in these universal life policies, and I want to just kind of touch on those really quickly. And the variations are based on how they grow that cash value. So there's going to be the premium that you pay in. You're going to get a portion of that in your cash value. But then there's also vehicles for growth on that cash value. So you can have a traditional universal life policy, which is just an interest rate, where they being the insurance company, is going to pay you interest on the amount that is in your account. Similar to what you see in a savings account. They'll just have whatever rate those company provides at that time. The next option is an indexed universal life policy, and that's where you can tie the growth in your cash value to an index. Typically you see them in the stock market indexes, but there are a lot of indices out there. You can tie it to stocks, bonds, you name it, you can find an index for it somewhere. And if you can find a company that will tie it to that index, there you go. And then the final option is a variable universal life policy, which gets much more complicated, where you can bring in individual securities, stocks, or mutual funds and tie that into your cash value. But that is a whole other level of complex that you really need to know what you're talking about if you're getting into one of those. So let's sum it all up. Universal life, it's life insurance. Your primary focus is that death benefit and your protection for your loved ones. But it also grows a cash value, just like whole life, but different than whole life, you have flexibility in your premium. You've got traditional universal life policies, indexed universal life policies, and the crazy complex variable universal life policies. So, if you like this video, click on the link in the description to apply to become my client. I look forward to hearing from you, and please make sure you take care of your now, your future, and beyond. Thanks for watching.